Hello everyone, my name is Joe. I'm a derivatives trader and I wanted to share with you my thoughts on the market in the past few weeks and hopefully shed some light on what I see coming down the road here. This here is a chart of the S&P 500 futures, the E-minis here. And you can see we've been in this fantastic uptrend from about the beginning of February. And I wanted to point out a few things here. Starting about right there, we've had 15 consecutive up days if you count this little unchanged day here, but if you don't count it, there's still 12 straight up days. And before that, the record was 9 for the S&P 500 futures, which have been trading since 1982. So that's pretty unprecedented to have 15 or 12, whichever way you want to look at it, of straight up day activity. Now, this hasn't been fun for bulls or bears. Maybe for bulls if you got in down here or down here, and you held on and you had the guts to hold on and watch it just rise. That was probably fun for you. But if you're a short, you've been losing your shirt, your pants, your everything while you're watching this thing go up. But we got stochastics, MACD, RSI, everything overblown, saying it's time to short, but it keeps going higher. But I wanted to make a bearish perspective for things in the future here, and I'm going to switch over to the S&P 500 index instead of the futures, and show you a little Fibonacci stuff here. I'm going to zoom out way back to the 2007 highs here. And we've got the March lows down there, and this is where we are today. So I'm going to pull up something interesting here is the Fibonacci time series, and I'll explain it once I lay it on here. I'm trying to click on that high, just double click, and then you can see that what this is made up here, these two lines, is double this. So double this makes up this. Double this one makes up this one. And so on and so on and so on. Now you can see something significant happens every time, pretty much, when we get to these new lines. There's something happened here, pretty significant. Here, and right there, and then right here. So right here pretty much went up from there. If you want to discount these couple of months of being under here, this was pretty big level right here. But so from there it went up and up and up and up, and now look where we are today. We have double this length here showing up all the way out here. Looks like something could happen pretty significant coming up here in the future. So that's the Fibonacci time series, and I'd like to show you the Fibonacci time ratios next. This is just a measure of predicting when things are going to happen. So we'll draw from the top here and then drag it all the way down to the lows. So now we have, let me switch to my panner here. Okay, so now we have, this is the 0 point, and this is our 100% point. Okay, so anything over all the lines, vertical lines here, don't really matter between the 0 and 100 because we're measuring after that is the big point here. Now you can see we came up from the 100% level. Obviously, that's why we drew it there. But you can have a look here right at the 1.326, 123% level. And you can see we had a pop right after that because we were coming down a little bit right before it. And then we had a pop once we saw it. And then we had some choppiness come at the 138.2 level. You can see I'm getting the level from down there. And you can see it chopping. And then with the 150 level, we corrected by consolidation. You don't have to correct to go down. You can correct by consolidation. Then it tried to come up a little bit more. And then bam, look what happens right when we get to the 161.8 level. We get a sell-off. And now we're coming up and up and up. And I don't know if you can see this right here on the edge. This is the level from the 178.6 Fibonacci there. So that's coming up. You can say that's... So something interesting could happen then. But I want to show you if we change these levels, because some people measure a little bit differently when it comes to the way they work with their math. So instead of 1.236, we'll make it even. We'll go 1.25, and then we'll go to the 1.786 and make it 1.75. So we have essentially we have the 1, 1.25, 1.5, 1.75, and these ones in the middle aren't as effective to us. So we'll press OK on that. Now you can see right there at the 1.25, I'm going to zoom in on that. Pretty much to the day that this 1.25 came out, we had this big spike. Pretty much to the day you could have bought that action. Now let's go over to where we are now. Look, there's the 1.75 right here on the 23rd. And looks like we may get some pretty darn good action coming up. I'm expecting it to go down just because of how overbought we are. But if we do have more upside, I'm considering maybe 5%, but that's pushing it. That's a lot. That's a good 500, 600 more points on the Dow, and I don't know if that's going to happen. So we're expecting it to get pretty low here. And if you want to say, well, the time frame could be pretty wide here from 175% and 178.6, we've got a couple of weeks. Looks like it's going to come in at the 12th of April. So if it doesn't come now, it may come in between then. So basically, you got 2 weeks of activity that could be pretty violent and choppy. Well, I wanted to show you guys that because I think it's pretty darn interesting the way you can actually figure out when things are going to happen, not just what's going to happen. So it's pretty interesting to follow the Fibonacci's because personally I believe that math controls our universe, basically, math and science. And my whole thing is I think the world revolves in mathematic cycles, and I also believe that even in the butterfly effect. So that's just me. And I wanted to show you the Fibonacci retracement real quick for the very last thing. This is why I'm giving the case for maybe 5% more upside, but I doubt it's going to happen. I think we're going to go down. I don't think we're going to reach it. This is the 61.8 level, and we can see that it's a good 5% up more here if you do the math. And I doubt we're going to get there because, yes, this was a very crazy time, and this was the straw that broke the camel's back once we finally made it through this level before, but I don't see us testing it in the future. And that's it for today. My name is Joe again, and I'd love to share some videos with you in the future. If you think I'm wrong, if you think I'm crazy, if you agree with me, please leave some comments below, and I'd love to hear from you. Thanks. Bye-bye.